And we've got the governor of Brazil's central bank with us now, Henrique de Campos Meirelles. Thank you very much indeed for joining us today. This is a problem that we never get to talk about here on this programme. It's been so long since we're talking about overheating economies. Europe really doesn't know anything about them these days. But you've actually beaten your targets for the year up until April, and you are concerned about trying to slow the economy there down. How are you going to do that in Brazil?
We have already exited practically all of the anti-crisis measure. We had acted as a lender of last resort in foreign currency to the Brazilian banking system as a result of the Lehman Brothers aftermath crisis. We used our reserves for that. That is already back to normal. We released reserve requirements in local currency to the banking system. That's back to normal. We acted directly on some transmission channels of the crisis, like in the futures market. That we are also back to normal. And we have already started tightening the monetary policy. We have the basic instrument for that. We have at this point a solid track record in terms of keeping inflation on target, and we are confident that we'll bring inflation to target on the relevant planning horizon for central bank.
And what will you do to bring the inflation back down to the target? You've raised rates. You raised rates in April. What else needs to be done in order to keep it in check?
Well, we have meetings at every 45 days. And at every meeting, we assess the overall situation. We make our projections. We are in Brazil inflation targeter bank, which means we take all the economic factors into consideration. We run our macroeconometric models. We make our inflation projections for 12 months ahead and for next year. Based on that, we take our decisions, taking into consideration the lag time. The base instrument, the basic tool is the level of short-term interest rate set by the central bank, but we have taken into consideration all the other liquidity measures, all the exit withdrawal, etc.
And how do events in Europe impact on Brazil, the sovereign debt crisis here at the moment?
Well, we are watching carefully at wait-and-see situation at this point. We are already seeing some decline in exports to some parts of Europe, some decline in the flow of capital from European corporations to Brazil. Not much, because some European corporations have a very large part of their markets in Brazil, and they have to keep that market share. For some of them, Brazil today is one of the most profitable units. Then there are concentrated investments there, but still, we might see some decline there, some increase in risk aversion, which means some decrease in the inflow of currency to Brazil. But we are prepared for that. We performed relatively well during the last crisis, and I think we are even better prepared now.
Are you concerned that emerging currencies are hit disproportionately the way they were in the Lehman's crisis? Are they hit disproportionately in terms of the sovereign debt crisis in Europe?
We have to, again, wait and see, because the way crises evolve sometimes are not predictable. In the case of the post-Lehman crisis, the crisis hit Brazil through the transmission channels of the cross-border lending, which dropped dramatically from 130% of the maturities to 20% of the maturities. And credit with cross-border funding was about 20% of the total credit in Brazil. That led to a domestic credit crash. Brazilian corporations would borrow in reais to pay off dollar loans, and that provided for a capital flight, together with funds liquidating papers to meet withdrawals, and so on and so forth. Corporations which were remitting money to their head offices because of cash needs. All of that had a stronger impact, plus the derivative markets, because the companies were long in reais by a large extent. In summary, all of that is not the case now. I mean, but again, we are prepared to face a situation, whatever it comes.
Okay. Mr. Meirelles, thank you very much indeed for joining us this morning.